Hey traders, Akil Stokes here, and welcome to another episode of the Trading Blog. I am in a great mood today for a few reasons. First of all, it's Friday. We've got beautiful weather outside. The trading week has been excellent. I actually just went for a nice 5-mile run, so I'm pretty excited about that. And during that run, I just had time to really think about life a little bit and take a second to realize just how blessed I really am. Not everyone gets to wake up and do something that they love each and every day, especially someone that came from doing 3 jobs that they hated every day. And not only do I get to do what I love every day, but I get to spend that time with a tight group, an inner circle of traders that just fill me with energy, fill me with inspiration, and just, make me really want to enjoy life. So if I haven't said it before, I appreciate all you guys that I work with. I know I'm a big help to you in your trading and for many of you in other aspects of life as well, but you guys also help me just as much. And that goes for our YouTube community as well, for you guys that follow me on social media. I did a post yesterday talking about personality tests, and I asked you guys to give me some feedback to let me know what you were. And, I spent all morning reading through the comments, and I appreciate you guys sharing that part of your life with me. In that comment, I actually found another personality test that a few traders shared. I think it's 16 personality traits. I'll share the link below, but pretty cool. I took that one as well. It takes about 5 minutes to do, and lo and behold, I came up as an entrepreneur. So pretty cool stuff. Now, in today's trading blog video, I want to share with you a conversation we had in our live trading room today. I got an excellent question from a client of mine asking about strategies and is trading a single strategy better than trading multiple strategies. So here's my response to that question. I hope you guys enjoy, and be on the lookout on the Trade Empowered FX page. If you guys are new, this is my personal page. We also have a Trade Empowered FX page where you see videos from myself, Jason Stapleton, Jason Greystone, Charles Miles, essentially all of the educators here at Trade Empowered. And each and every weekend we do a Forex market preview. And this week, I think, don't hold me to it, I think I'm going to give you some behind the scenes footage at one of our private strategy labs. So make sure you're subscribed to that on the YouTube page. Make sure you're also subscribed to our email list. Go over to tradeempowered.com, click the Learn to Trade tab. That way you get put on our email list, and you will get an email as soon as that video is out. And between me and you, I typically release that email to our subscribers a few hours before it hits the public interweb. So make sure you're on that link, on that list, so you can get that email early, and also so you don't miss any upcoming free events that we do. So you guys enjoy this video, and also enjoy your weekend as well. Let's head over to, let's bring over the Aussie dollar 15-minute chart into 26.18. Get over here, baby. There we go. We had a 26.18 earlier today. Mark says, how many strategies do profitable traders typically have? Ranges, various amounts. You could have one strategy that works. You could have one very specific strategy that works. You can have a handful of more vague strategies. You can have one vague strategy, just like price action. You can have a lot of strategies that work. So it varies. I think it's good to have multiple tools in your arsenal, or multiple weapons in your arsenal. That way it allows you to be a little bit more adaptive as market conditions change. So I think one strategy is a good place to start. Just understand, when you trade one strategy, there's going to be some wild swings. For example, if your one strategy is a trend continuation strategy, it's going to do very well while the market is trending. It's going to do very poorly while the market is in consolidation. Whereas if you have two strategies, let's say one is a trend continuation strategy, one is a counter trend trading strategy, let's say it's like a consolidation strategy, then you're going to have one strategy doing good during trend, and the other one is going to be going sideways a little bit. So you'll have your trend trading strategy will be going like this, right? Doing good. And then your other strategy will probably be getting beat up a little bit doing something like that. And it may seem bad at first because you're like, well, Akil, if I have one strategy doing well and one strategy doing poor, doesn't that mean I'll lose money? Doesn't that mean, or not lose money, doesn't that mean I'll just be break even? And that's not necessarily true, because guess what? If your wins are greater than your losses, then your equity curve should still be on this path. Does that make sense? If when you win more than what you lose when you lose, your equity curve is still going to be pointing up. Now, it's not going to be pointing straight up, right? Like that. But I'd much rather have a slow, steady equity curve like this than have an equity curve that does very, very good and then very, very poor, and then very, very good and then very, very poor. Because those type of wild swings can get you in trouble. Psychologically they can, but if you're tough, you can deal with it. But sometimes they can get you in trouble as far as money management goes, because it could be dumb luck, but you may be unfortunate enough to do so good that you up your money management, up your position size right when the drawdown happens. And then when you hit that downward streak, you hit that downward streak with a higher position size. So essentially you're losing more per trade than what you won when you won, and that takes you down here. And then you got to go back and adjust your position size back to the normal amount because you lost so much money, and then you start winning again, but then your wins aren't as good because you're back to your normal money management. And stuff like that could happen. I'm not saying it will happen, but stuff like that could happen. It's happened to me. It's happened to me. But stuff like that could happen. So I think it's good to have multiple strategies so you can kind of hedge. You can kind of hedge your bets a little bit, and it also allows you to again be a little bit more. What I'm looking for, being more adaptive to the markets. So when we've had horrible market movement this year. So when you have markets going more sideways and less trendy, you have something that you can use to try and take advantage of those times. When the market eventually does get back to being heavily directional, then you have something that you can take advantage during those times instead of just playing the sideline. So very good question. That just might be I wasn't going to do a trading blog today, but that's a good question. I'm going to write that down. All right, traders. So I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.